Hi, and thank you for joining us. Having gone through and demystifying all 7 principles of effective tax governance for private groups, we wanted to wrap it up today with our top 5 tips to maximize your chances of receiving the best outcomes during an ATO review. My name is Carney. I'm an indirect tax specialist here at RSM in Brisbane, and I'm joined by Sam Mohammad, our National Head of Indirect Tax. Over to you, Sam. What do you consider are some of the top tips that private group entities should keep in mind when developing their tax control framework?
Thanks, Louis. The most important tip is simply just get off the start line. Make a start and get a fit-for-purpose tax policy in place. If you don't have a board-endorsed tax policy, then the ATO will give you a very low rating, and you're on the back foot from there. Also, if you do have an existing tax policy, make sure you follow it, as it's not a lot better than having an off-the-shelf or a ChatGPT tax policy that has no resemblance whatsoever to your business. The second tip is to undertake a gap analysis. So a gap analysis is a benchmarking exercise where you assess your current tax governance and control framework against the ATO's 7 principles of effective tax governance. The outcome of the tax gap analysis will serve as a clear roadmap and the action points of where the improvements are required, and signals to the ATO that you're serious about demonstrating to the wider community that you are paying the right amount of tax. Louis, what's the next tip?
Thanks, Sam. If it's not documented, it does not exist. We can't stress this enough. We notice that many clients may have controls and procedures that exist intuitively in their organization, but these are not documented. The ATO seeks objective evidence that the following minimum procedures are documented: the income tax return preparation process, the BAS preparation process, the FBT return process, and mapped ERP or IT system flows, and a tax risk matrix. Our 4th tip is not to wait for the ATO review before you make a voluntary disclosure. The ATO is increasingly skeptical of businesses that only ever make voluntary disclosures at or around the time of an ATO review. Instead, what the ATO would expect to see that a business which has robust systems in place is that voluntary disclosures and BAS amendments occur periodically and not just when the ATO comes knocking. Sam, what is the last top tip?
Lastly, I'd say that we've noticed a significant increase in the importance and reliance the ATO places on taxpayers being able to understand and explain the differences between the business performance and the tax performance through the use of the GST Analytical Tool, or GAT. For GST purposes, being able to perform an annual comparison of an entity's taxable revenue and expenses in its P&L to that reported in the annualised BASs is highly recommended, as the ATO uses these comparisons to identify risks and the level of potential ATO engagement.
Thanks, Sam. Now that wraps up our initial series on tax governance for private groups. Be on the lookout for a summary with quick links to each episode, serving as a quick reference guide. Thanks again for joining us. Have a great week. Thank you.